Walmart hitting new highs after raising its guidance again. Our next guest expects the stock to continue its significant performance and names it one of his top picks of the year. Michael Baker, D.A. Davidson, senior research analyst, joins us now. He's got a buy rating on the stock, price target of 85. It's been a winner. It surpassed expectations, Michael. How do we look at Walmart doing so well in this environment? Is it a sign of strength or weakness for the consumer?
Well, we just think Walmart is really well positioned right now where the consumer is spending. They are being a little bit choiceful with their spending. So Walmart is well positioned there in terms of their non-discretionary mix. But they're also giving value on some discretionary items. And we're seeing those start to get a little bit better. I actually think the October retail sales are really strong. We're seeing the consumer be a little bit more confident. So Walmart really well positioned on both sides. And they're doing it all while growing profits faster than sales, which has really been in line with our, sort of core thesis at the beginning of the year and why we called it a top pick. We think they can take share by giving customers a value, but at the same time, because of some of the other things that they're investing in, can grow margins faster than sales. And it's really working pretty well for them right now.
The market share growth. So they're taking share in every category, as I reported. They're clearly gaining a lot from the high income consumer group. Who are they taking share from? Who gets hurt by this?
Well, I think a little bit from everybody to start with. We'll see tomorrow what Target reports. Pretty sure that Walmart's going to have a better sales result than Target, and they have, throughout the past year. So we do think Target is coming under some pressure from Walmart. But Walmart, one of the areas that they've been investing in is in convenience. That is helping them drive market share with the higher end customer. In fact, households of $100,000 or more made up 75% of their market share gains this quarter. And we think that's coming from, guys like Target and a lot of other retailers. Really, it's Amazon, Amazon, Walmart, and Costco taking share from everybody else.
What about the balance of the general merchandise versus food? Obviously, food is bigger and it's more of a draw, and it's how they're getting a lot of people in the store. But what have you learned about, because Walmart's made some specific moves to go into brands, for instance. I mentioned Apple and Beats, and widen the assortment. How is that paying off?
Yeah, it's working. Food was really strong for them. Their food units were as strong as they've been all year, but their general merchandise sales accelerated to up low single digits. They had turned positive last quarter, but this is positive and accelerated from last quarter. They've been negative prior to that, so that is getting better. And by the way, units are up much more than that because there is some deflation on the general merchandise side. So all those investments that they're making, not only in the stores in terms of brands and remodels, but also in their online business, the marketplace business, they're really starting to show up and drive that better general merchandise trend. And we think that's a really good sign, by the way, heading into the holidays.
Michael, last quarter they gave some pretty interesting metrics on how AI efficiency was going to save them man hours over the next several years. I wonder, did you get more color on AI assistance this time around?
Sure. They talked about all on the call. The COO talked about some of those investments in AI and how those are continuing. Not a lot in terms of metrics, but it's helping in terms of the customer shopping experience. It's also helping with the employees and the associates and their engagement. So they will continue to invest in that. And we think that's really one of the advantages of Walmart. It's really about scale and retail, and they have the ability and the capital to invest in these types of things. And that just perpetuates the shopping experience and, again, the associate experience. And happier associates mean happier customers. So it's a flywheel that's really working well for them right now.
I mean, I talked to the CFO. I asked him about tariffs. I was surprised it didn't come up on the conference call. But what he told me there was, yes, 2/3 of their items are made, grown, or assembled in the U.S., so that's good. But there will be an inflationary impact for any incremental tariff. So does that mean it's not a risk for margins?
Well, on a relative basis, it's a far less risk for Walmart than I think for other retailers. Again, because of the percentage of sales that is sourced domestically. But even the roughly a third or so that does come from overseas, again, it's about scale. And that tariff impact is going to be shared among the retailer, the suppliers, the manufacturers, even customers in some respect with a little bit of inflation. But within that ecosystem, Walmart, because of their size and their scale, has the ability to push back on vendors and importers and really have most of those costs, I think, absorbed upstream.
Walmart shares doing well, 3.3% higher, adding 18 points to the Dow. Michael, thank you for joining us.
Happy to do it. Thank you.